Hey guys, welcome back to another episode of the Humble Flex Podcast, where we find dope entrepreneurs positively impacting their communities. And today we have a special guest. His name is James Moise. I knew my boy for a good amount of time since high school, and we went to the same college together too. And my boy James has been definitely hustling in his area, and we're just gonna hear from him and how he's been able to, as he's building up his empire, and just get back from him. So what's going on, bro?
Well, thank you for having me on the podcast, man. I really appreciate it. What I do is, so my name is James Moise. I am the co-founder and CEO of JWJ CAPITAL. We are a financial community that we teach and instill the right principles into young, beginning, intermediate, and some advanced traders, even investors as well. So a big chunk of what we do, we kind of help people kind of guide them down the right path and making the correct choices and what kind of investments they're looking for, more aggressive, more conservative, however you want to piece your pie. But I do want to talk a little bit about investing, but the real bulk of what I want to get through to the people watching is what is wealth? How does it differ from being quote unquote rich? And then how do we build wealth as young entrepreneurs with people that don't have a lot? Because I know me and you, we grew up. I didn't have a lot of money.
Yeah.
When I graduated college, I had about $2,000 to my name.
Wow.
Right. So I was on my way to work for a hedge fund. I really had found a love for investing and financing. Not so much that because of the money that it brings, but more so that I have control of my time.
I love that.
And I really want to get that point across to a lot of people. Is it's not about how much money you have in the bank.
Yeah.
It's about how you spend your time. I'd rather be that guy that makes $50,000 a year and can hang by the beach 7 days a week than being the guy making six figures a year, but he's working 8-10 hours a day, no time with the family, can't see his friends, can't even do the stuff that he wants. So I think that's a big thing that you guys should be focusing on is control that time.
The real flex is having your time, right?
100%, 100%. Nothing like spending your own time. Something like that, it's invaluable. Money can be replaced, things can be replaced, time cannot.
So good, bro. Before we even get into the investing, just some background, because we were saying that before this podcast, we haven't really seen each other,
Yeah, it's been a while.
COVID, and definitely the mindset we have now is not what we had before.
Absolutely.
So someone just brand new listening to this, a brand new entrepreneur. So just share the mindset you had before.
Definitely. So before I really got into this kind of path and how I got into it, it kind of started with, even when I was a kid, I was 15 years old. I had my first job. I was hustling, selling newspapers. Yeah. So I would go door to door and sell Sentinel subscriptions. Yeah. And so I did that for 3 years, and then after that, I got into a little bit of the shoe and clothing hustle. Yeah. So I was flipping clothes and just kind of getting any kind of income that didn't include me being in an office or working for somebody. Yeah. Like a big thing
so you've been an entrepreneur. You've been a hustler.
I've been a hustler. Entrepreneur is it's a little different, right? Because you have to deal with a lot more variables. You're trying to build something. When you're hustling, you're just trying to make it. You're just trying to survive.
That's good.
So a lot of people, I know a lot of people out there that are hustling. A lot of people doing all types of things. The flipping shoes, bags, whatever they can do. So a big thing with wealth and how to build it. It's all a mindset. Yeah. So a lot of people think that, you hear people all day say, I want to be a millionaire.
Mm-hmm. Oh yeah.
So what does that mean?
Yeah.
Can you, people that don't really understand, what they say is, I want to be a millionaire. What they really mean is, I want to spend $1 million. Yeah. Right? They want the things that $1 million can buy. Yeah. But exactly. Yeah. But what people don't understand is, it's not about that kind of money. Rich people aren't worried about how much money they have in the bank, right? Only greedy ones are. But if you have what's a very important concept, and that can be learned for anybody, is learning to have enough. A lot of people want more and more and more. When they get to a point, I'm someone that had no money, right? Yeah. Now I've come into a decent amount of money myself. Yeah. I've grown my business from the scratch.
I love it.
From nothing, from what I had in my bank account. And I've learned over time that I used to stress so much about money, and I used to be so worried about paying my car, paying the rent, paying for food, you know what I'm saying? That it would eat at me every day, And what I didn't really realize was, now that I have that sort of cushion, and now that I can control my time, I'm not so stressed about the money.
Mm-hmm.
I'm focused on building my assets so that I could buy more time. Right?
That's good.
So, and that's another big thing that people want to focus on is, again, it's not about the money.
Bro. Dang.
You know, you really want to be focused on your time, because me and you, we have the same 24 hours, right?
Yeah.
We wake up, we decide to do whatever. I have the same 24 hours as Elon Musk.
Yeah.
Right? Wow, how is he worth $130 billion?
Yeah.
Right? How is he spending his time?
Yep.
That's all it is.
Wow.
That's all it is.
That's really crazy, because like today I read that we are the sum total of where we spend our time. I learned that from a book, and I was just like, whoa. And then it hit me. It's true, because like if I'm always eating ice cream, right? If I'm always eating, not working out, of course I'm gonna be fat.
Yeah.
Because that's where I've been spending my time. That's what I've been meditating on. You know what I'm saying? But if I'm always like, you know, reading books, I'm always trying to get myself better, I will get to the place I want to get eventually.
Eventually.
Because I'm setting myself up for that. So
exactly.
Yeah.
So you know, like you said, with like any choice you make in your life, whether you're 17 years old, whether you're 30 years old, whether you're 50 years old, choices compound over time, just like investments, right? If I eat like bad for, you know, 20 years, how am I going to look? Pretty bad, right? It's going to compound over 20 years. But if I eat healthy and I work out and I do the right things, what am I going to look like in 20 years? Those kinds of things, even in life, they compound. Relationships compound.
Oh,
right? Spending time with somebody that, you know, your significant other or something, or even your family. And a lot of people, I feel like they really kind of value other things over something that is irreplaceable. Like love, time, family, wealth, happiness, you know, health, stuff like that. Those things money can't buy.
Yeah, that's good. Bro, so tell me how you got started. Like, tell me how the journey started, and like, and then where you are like right now.
So like I said, I graduated college, didn't have a lot of money, put more than 50% of what I had into this business. So the idea was that I always wanted to do something like this. I always wanted to teach people that really had a difficult time learning how to invest and trade, right? Because there's two different crowds. There's people that want to make the fast money, there's people that want to make the slow, consistent money, right? Whether it be through dividends or index funds, whatever they're investing in, right? But I wanted to show people that you can be consistent no matter what. What it takes is the right strategy and the right mindset going into the market every day. A lot of people try to predict, right? They try to predict where the market's going. You even see big you know, economists trying to do this with interest rates. You know, there's a study done where, you know, of the top 100 you know, economists in the world, in the United States, they're trying to guess the interest rate per quarter. So, you know, the Federal Monetary Policy updates their interest rates often, right, every quarter. So less than 30% of those economists got it right. More than 50% of the time. So that just shows you that professionals are lying. They don't know what they're, you know, they don't even know what they're saying. They're you know, essentially, as long as there's something to teach somebody, someone will do it for the right price.
So let me just get, it's just for our viewers. So you're saying that there's some people out there that will kind of show you the lifestyle, but that's not really doing the part. Like
so a lot of the stuff that, you know, a lot of people see on Instagram and Facebook, and all these people that are, you know, traders, and they're flexing their Lamborghinis and their, you know, their Rolexes and stuff like that. You know, if you can't tell by now, it's not authentic. It's not genuine. Very few of these guys are actually doing that. I'd rather be the guy, like I said, that can spend time with his family all day than being someone that's worried about you know, upgrading his lifestyle constantly. And you know, that kind of goes back to what I said about having enough, right? When is enough going to be for you? You know, because everybody has a, you know, a certain level of comfort that they can, you know, you live below your means. And rich people live below their means. I don't know if people know that or not, but Warren Buffett drives a Cadillac. It's a humble flex, man, and it really is. And you know, being you know, so like I said, it takes a lot of time and energy to learn this kind of stuff. But you know, I kind of want to get out a couple of principles that I live by and that I focus on every day. But you know, to answer your question about how it started. It's me and my two friends, really good friends, Jordan and Will. We run the entire infrastructure. We've created, we did the website, we did the server, which everything is communicated on. So essentially, you know, if you're in our community, you get put in our server. That's where all the analysis and updates and all the, you know, texts and notifications you guys are going to get is going to be through there. But what it really represents is kind of like I said, being in control of your time and not letting somebody else control you, right? Because a lot of people, they may think they're rich, but if you have to be told, where to be, what to wear, how to act, are you really rich? I don't think so, personally, but some people may argue against it, but I don't think so.
Okay, so you said you and two homeboys, right? Two of your boys.
So
right?
two of my buddies, we've been trading. We've been trading for a while. So I've been trading for about 5 years now. So I've been doing this half a decade.
Okay.
Right.
Wow.
So I mean, in the beginning, it was tough. Believe me. I mean, I got burned a lot, lost a lot of money, but kept coming back, and eventually, I found something that stuck, and I've been able to, over time, sort of mold and master it into where I can kind of teach it and where I can kind of show people.
Okay, so you and your two buddies, right? So how do y'all meet? Like, how do you guys meet? Just
we live moderately close to each other, so a lot. This was discussed actually over a business dinner we had one night, and we discussed what the name was going to be, how we're going to do this, and this was in December. So, from December to January, we had made a whole brand. We had created everything from scratch. Nobody had helped us. We had hired we had outsourced someone to make the logo for us, and we outsourced the web developer as well. That was my my girlfriend's stepbrother, so that was in family. But really what So essentially with those two guys, and so we've kind of built that. We I have Will. He does all the manufacturing and all the marketing and all the advertising and everything that's run is through him. And then Jordan and I, we run the server in-house. So I'm doing analysis up until late in the night, and I'm sending out charts and I'm sending out market updates and stuff like that.
So someone that's not really familiar with this, like this is like for me, like if I saw like a graph, because I did engineering, right? And I show people some graphs like, yo, what the heck is this?
Exactly.
And like when doing investing, it can be even more tricky.
Yeah.
So could you just like break down and simply like what are you doing?
Got it.
When someone sees a graph, like, hey, what is this? What is that?
Okay, so like I said, there's two crowds. There's the investors and then there's the traders, right? So you can be both. You can play both games, right? And so
I don't mean to cut you off, but like when you say investing, right? There's different kind of investing.
So there's definitely different kinds of investing. I mean, if you want to be a slow but earning investor, you're going to want to invest in stuff like index funds. And mutual funds. These are very low risk, and the reason why they're low risk is they're essentially assets holding a bunch of other assets. So instead of me investing in Apple, I'm going to invest in the S&P 500, right? Because Apple is it holds about 7% weight in the S&Ps, right? So there's a lot more stocks controlling this one stock that I'm in as opposed to Apple. So if Apple has a red day, I could still be green. Right. Whereas if Apple has a red day and I'm all in on Apple, I'm gonna have a red day. I'm gonna be down. So you can do index investing. You can do growth investing or value investing. So value investing is kind of finding stocks that are undervalued in terms of their quarterly gains. So every stock in the stock market since 2001. Have you ever heard of Enron?
No.
So Enron was a public company trading during the dot-com bubble. So this is around 2000, 2001. And back then, companies didn't have to report their earnings. So earnings are now what we call, it's very important for an investor because you get to see how the company is doing every 4 months, right? Or every 3 months. So you want to be watching those earnings if you're a long-term investor because that's going to show you the outcast for the growth of that company that you're in. But so ever since 2001, that's been it's a federal law that stocks may have to report their earnings every quarter. Obviously, that takes away from some like Chinese stocks and Indian stocks, that may not be what's called United States financial regulations, right? And they may not be opposed on those same guidelines, but nonetheless, right? So you can either be, like I said, index investor, value investor, growth investing. So these are stocks that don't have any actual revenue or very little revenue, but these are big innovative companies that could have a big mark later on in the future. So investors kind of foreshadow what's called a PE, so a price per earnings. So they essentially advance the earnings price. So they're saying, well, this company is going to make 20 million in a year from now, even though they're not making $1 right now. A good example of this is Virgin Galactic, Richard Branson, space. That company's not making anything, right? What they're doing is they're dumping money into this idea that we can get people to space and we can travel them, right, for a low economic efficient cost. But right now, that would be considered a growth stock, right? Stock that doesn't have any earnings or actually any income, but still has potential in the future. And then something like a value stock would be something like Apple. And then there's trading. So me personally, I have a trading account and then I have an equity account. The money I make from my trading account every month, so I'll start with a certain amount, let's say $10,000, right? I start with $10,000 for the month. If I net a certain amount of money by the end of the month, I'm going to scalp or scale that money back into my equity account. So what I'm doing is I'm turning options gains, so these are short-term capital gains, right, that I'm making day in and day out, week after week, and I'm rolling these over into free shares of companies. So as I'm getting paid in the short term, I'm also adding to my long-term wealth in my portfolio, right? So that's what we kind of teach people to do, because a lot of people, even people on Twitter, they may see, well, you see this guy that has, I turned 1,000 into 100,000. Excuse my French, you know what I'm saying? So a lot of people, they're not really going to be doing that kind of those numbers. It's a lot of it's faked, photoshopped. I've seen it. It's pretty crazy, to be honest. This business that I'm in particular, the trading, investing, there's a lot of bridges that people are willing to sell you, right? Like I said, if somebody wants to learn something, there's always somebody that'll do it for the right price. So yeah, that's kind of where we started from, how we kind of got to where we are now. And now we house over 2,300 students. And I run that every morning, man.
Okay. Now you got me interested. 2,300 students.
So 2,300 students we have in the JWJ server. So these are people like, anybody, college students. We have nurses. I have some guys from veterans, so they just got out of the Army. Doctors. I have some, other entrepreneurs as well, and also some full-time traders in there as well.
Let me ask you this. So 2,300, that's a lot of people.
It's a lot of people, man.
And it's just you three, right?
So our margins are really high. I mean, business-wise, the margins are in the couple hundreds of %. But it's because we don't necessarily. So this is kind of what I wanted to get into as far as wealth principles, right? The reason why we can do what we do, and same with yourself, right, is you have what's called specific knowledge, or sort of this intellectual property that not many people can copy it. Right? Like, not somebody that's going to watch this and view it one time is going to be like, well, I'm a master at the stock market. They're going to take, like I said, 5 years, 3, 4, 5 years in order to get to where they want to be as far as an avid investor, someone that's really, really good in making consistent gains. But again, it takes time and it's not something that should be rushed. So if I'm somebody that's never invested $1, so if you have never invested $1 in the stock market, I would definitely not invest right now. We're very, very high in terms of growth and percentage-wise from the beginning of the year, and even from March 2020, which was the lows. But I would definitely say if you're somebody that has a good amount of cash on savings, I would wait for the equities market to pull back maybe 20-30%. And then dump a lot of money in Vanguard trust funds. So this could be VTI, VOO, or IVV. And so these are basically, like I said, index funds that house multiple assets, multiple stocks. And that you can grow, you can have a portion of Disney, a portion of AMD, NVIDIA, Microsoft, Amazon, whatever. But you don't have to put down that Amazon money. Because a share of Amazon is about $3,500, right? So if you want to own an Amazon but you don't have the money to invest in the actual shares, you guys want to be investing in index funds.
I love it. So I really want to go back to that 2,300. It caught my mind. I like that.
Yeah. So I mean, we've started we began accepting members on January 26th. So everything's within the 2021 fiscal year. It's all through Instagram and Facebook. I mean, we've done advertising left and right. But like I said, it wasn't built overnight. I was gonna kind of bring this up a little later, but it's easy to ride that high when you're on a good day. When you sell 20, 30 shirts in a day, you're like, dang. Like I just made what I would have made back in my other job in a month. So, some days like that, but what makes a real entrepreneur and what sticks and what makes people successful is how you act when you're going through adversity, right? When you have a bad day.
That's good.
When you have a really bad day, and I'm telling you a lot of people do, but the reason what separates successful and unsuccessful people is people fold. It's easy to quit, guys. It's really easy to be like, well, this is it for me. I'm done.
Yeah.
Right? That's why you have what's called the 1%, right? In my terms, I call it 10% because I want to be a little more, giving, and see, a lot of more people in that mind space. And the thing is it's not really about wealth. Like I said, it's about mindset. Got to have the mindset to achieve, because if you're having a bad day, pick yourself up and get back after it the next day.
Wow.
Brush it off your shoulder.
So going back to that 2,300, like,
yeah.
Do you so because when I hear that number, I'm thinking about Spotify.
Okay.
How I have like a pool of subscribers, right? Okay. Is that what you have, a subscription?
So so we do offer a free membership, and then we also offer a premium membership. Okay. Obviously, as a premium member, you get a lot more. Okay. It's more bang for your buck. And then we also, for somebody that has no clue what they're doing, we are also proud to announce that we just recently published our JWJ Market Mastery course. So this goes in depth over 5 different trading strategies that I use my personal self, and what we call trading edges. And so these are just essentially, strategies that you can use in your own trading, whether it be investing or trading, in order to kind of outperform the market. And the biggest thing is risk, right? Especially if you're a trader, not so much an investor. Investing, there is risk as well, but trading, a lot more risk. If you're a trader, you really want to be understanding on how to manage your risk. And not just in the markets, right, but even in life. You want to be managing risk in your choices. And you always got to keep in mind that there's never a gain so large or so great that it's worth the risk ruining yourself over, right? So, a lot of people go all in, right? Yeah. All on black, all on red. Awful choice. So, you really want to be risk averse and understand.
So we got a couple more minutes left, and I want to ask you this question. So, just for our viewers to know, so with that course you were mentioning, right? So would that course be for specifically a beginner? Like,
yes. Yeah. Okay, so for anybody, anybody so the way I teach it very simple, very sweet. Yeah. There's not you're not going to see a bunch of crazy stuff on my charts and what I'm teaching, right? I'm teaching you what we call price action and supply and demand. Everything in life and everything in the markets follows the law of supply and demand, right? You have shortages, you have surpluses, and depending where these spots are on a chart, you want to be buying or selling. And so we teach our members how to do that, obviously, and we've had some great success in our 9 months that we've been open. So I'm just really happy, honest to God, that I get to help people, everyday people, people that have a job, people that have kids, people that have people that have medical bills and stuff like that. I get a bunch of messages and stuff like that. It kind of pushes me to keep going, and it definitely really I want to be better every day. Like you said, you want to learn every day to do more for people that and that you don't know.
That's good. So can you share, what's your biggest setback, or your biggest failure?
So my biggest setback, I have a couple, man. So when I first started, like I said, I made about a decent fortune. I turned about $1,000 into about 11 grand, my first month ever trading. So you could say I was immediately hooked into the stocks, right? So this because the reason why this is such a big deal for me at the time was, I was in college. So I had no idea what I was really doing at the time, to be completely honest with you. I would call it beginner's luck. And like beginner's luck, it runs out. So I had experienced a very bad pullback. I had lost about, almost all that money in the next 3-4 months. So when that happened to me, it was easy for me to say, well, this isn't for me. I'm done. That was 4 years ago. So now I've completely changed everything about the way I view the market, the way I study it, the way I teach it. And now it's
Wait, so you made that 11,000 based off
I did
strategy?
So I do what's called options trading. So it's a leveraged way of trading. Essentially, the way that it works is, I won't get into the semantics of it, but you're risking a little for a lot.
Okay.
But there's also you can manage your risk in those positions. If I put on $1,000 position, I can choose to lose $100. I don't have to lose the full 1,000. Gotcha. And so it's kind of stuff that we teach to people, especially new investors.
All right, that's great. So what does your morning routine look like every single day? What do you?
What's
a day for Jay?
Yeah, so when I first started this business and I first started trading, really, because I was still in college, so I didn't have a lot of time. Most of my time was spent learning this. I don't have that many close friendships anymore. I have a very 3 people that I, consult on a daily basis. And so I really sacrificed all my time, my early 20s into learning this skill. And that's why I'm able to teach people with it, and kind of, sell my knowledge out there and help someone else. So my morning routine, when I first started, I was waking up like 5, 6 in the morning because, I had class at 7 or 8 or whatever. So I'd get in a few hours of studying and then go right to class. And then, as a bad student, I would sit all day and watch charts. I would watch price action. I would watch news, how it reacted to certain stocks. And, over the years, I kind of built a framework on how to think and how to act in the markets, and what works for me, what doesn't, when I should be in, when I should be out, and stuff like that. So, a morning routine. I'm up at 6, 7. Again, at least nowadays, I'm up at like 7 or 8 trying to get the information out for the server. So I put out a watch list every morning. So this watch list is for the week. So you can pick and choose these stocks how you choose, right? If you want to invest in them.
You don't go eat first.
So no, I don't eat before I trade. I may have a cup of coffee or a cup of tea.
That's discipline.
Food kind of, I don't know. I can't really eat. I don't know. I'm not a big breakfast guy, right? So I kind of like wait around like 10 or 11. Then I'll have a little bit of like that breakfast, lunch, maybe a shake or something. A couple hours of trading. Around 11 or 12, I'm out of the door. I'm at the gym. Or I'm, out getting lunch with the missus. So, now it's a lot different because now I've kind of established myself. I want people to focus on when I wasn't where I am now, right? I want people to be like, well, he was getting up early before class, learning the stuff. I was in class learning with my AirPods in or my headphones in, studying about, different market cycles and how to not necessarily time the market, but time in the markets, right? You have to have skin in the game if you want to be a successful investor.
That's good. What was your major, by the way?
I was a philosophy major. I graduated from FAU. So it has nothing to do with finance, but a lot of critical thinking, a lot of rational. You want to be a rational optimist in investing and in life, right? Pessimists don't make it too far.
And that's some fire stuff. So last few questions. So where do you see yourself in the next 5 years from here? Like your company?
The company, I want to really talk about again, like, 5 years from now, I'm sure that we're going to be doing great and, we'll be successful. But again, am I controlling my time? Am I allowed to do the things that I want to do? Am I not restricted by certain variables, right? And so really the big focus is, I know I'm going to be successful in 5 years or more successful in 5 years, but that's not really why I do it. I do it because I enjoy the process. I enjoy the challenge. I want to be challenged every day. I don't want to be content. I don't want to be complacent because then you kind of, experience that kind of drawdowns and pullbacks. And, it's always good to keep pushing yourself.
That's so good.
Shoot for the stars. Was it hit for the moon or something like that?
Something like that, right?
Something like that, man.
That's great. Yeah, man, because just sharing my brand real quick, Humble Flex, it's about, just me getting that brand name too. It's, that's what's really been pushing me, like just knowing that I'm impacting people's lives because you're going to mess up. I messed up so many times, like whether it be in manufacturing or whether it be in just with customers or just trying to just learn how to market, because when I just first started, I didn't study this,
no,
you understand, you just don't know what you don't know, you understand, and just know, just with the brand name and the meaning of it behind it, overcoming odds and obstacles, and how, the humble, will always be exalted, the humble, when you have that humility, because you can't learn anything new if you're prideful. Hey, I know what I'm doing.
Yeah, exactly.
You gotta stay humble, man.
You gotta admit defeat, and it's okay to be wrong, but it's not okay to stay wrong.
That's good.
It's not okay to stay wrong. You have to be able to update and and see yourself in a new light, in a new way. We were talking about it before, but like businesses, running your own. I wasn't a business major. You weren't a business major. I don't have my MBA. Guys that go study for their MBAs, be completely honest with you, what they're doing is they're studying case studies, right? So what they're doing is, they're seeing, how Mark Zuckerberg or Jeff Bezos made it. But what you're doing is you're reading winning lottery tickets, right? You're reading somebody else's mistakes and variables, and those aren't yours. So
that's good.
Yeah.
Say that again. Say that again. Like.
Yeah, man. So, like, just so for people that didn't hear it,
people
right?
in the back, you know.
People in the back. You know, if you're researching, hey, how did Elon Musk get his fortune? How did Warren Buffett get to the investor he is? How did Jeff Bezos get to build Amazon the way it is? You won't find it anywhere, right? Because these are all different guys that had to deal with different situations, and they all had to come up with a solution on their own, right? So when you're reading those case studies, you can use them as inspiration, but essentially what you're doing is you're reading somebody else's winning lottery ticket number, right? You're not going to follow the same situations and footsteps as Elon Musk or Steve Jobs or Larry Ellison or somebody like a big CEO, a big entrepreneur, right? You know, you're going to have to deal with your own problems. You're going to have situations brew up, and you're going to need to come with a solution, right? And those are things that an MBA or a class isn't going to teach you, right? Real life experience. I learned more about running my businesses, like you said, in a year than I have in the past 4 years at university. So at the end of the day, it's like I said, it's all about having skin in the game, and then it's all about always trying to learn and be better, right? I always say, maybe somebody finds inspiration in this podcast, but you know, you can inspire people, but you can't motivate them, right? Motivation's from within, right? And with motivation comes discipline. So you know, if you want to be successful, you got to find it within you, man. You got to find it within you. You got to push, and you got to, you know, no matter what somebody says, if nobody believes in you, you have to believe in yourself. And that's kind of where I started, I'm sure that's where you started, and you know, now you see where we're at. So it pays to believe in yourself. Believe me, it pays to believe in yourself.
That's good. Hey man, I want to go on this next part of the podcast, so the Humble Flex Challenge. So we're gonna ask you just 3 rapid fire questions. You know, you just answer them best you can.
Gotcha.
You know, so here we go. What is your favorite Cartoon Network channel?
Like show?
Show.
Yeah. I'm gonna go with like an old school one. I liked Courage the Cowardly Dog. Remember that show?
Yeah.
The pink dog. That was a pretty trippy show back in the day. Definitely.
Yeah.
I can't remember too many Cartoon Network shows. Is that the Rick and Morty on Cartoon Network, you think?
I think it's Adult Swim.
I think it's Adult Swim, yeah. So,
but it's on the same
channel. Same channel, you know, same jive.
That's dope. I like that. What's your favorite 2000s song? So in the 2000s.
Anything 2000.
Yeah.
I really like Usher, man.
Usher. What song though?
Was it Burn It Up? Something like that, right?
It's Confessions, man.
No, not Confessions. No. Not in a light skin mood.
Yeah.
No. But Usher was definitely killing it back in the day, man.
Yeah.
I like Red Hot Chili Peppers too.
Oh, yeah.
They're more
what
90s.
Song?
California.
Yeah, I see you, man.
California.
You got some taste, though.
Yeah, man. I mean, I enjoy music. You know, I like to listen to some old school stuff too.
Yeah.
You know, like Frank Sinatra.
Yeah.
Big Frank Sinatra guy. You know.
Yeah, man. Hey, I almost forgot it was your birthday the other day.
Last week, yes. Yeah, we just turned 23.
23, bro, and you have a company. I'm 23 too.
Yeah. Congratulations, man. You know what I'm saying? So, yeah, you know, age is but a number. You're only as old as you feel, right? So, you know, it's cool, man. It's cool to celebrate another year of growth and learning and stuff. So,
just growing more.
Just keep growing. Keep going.
You said you were a shoe head too. So, what's your favorite shoes? Sneakers.
Air Force Ones.
Air Force Ones. You're
For
classic.
Sure. For sure.
It's a classic, bro. That's a classic. I love it.
For sure.
Well, what color though? Just the white plain ones, or?
Yeah, all whites are pretty crisp. I like Dunks as well. Dunks are really nice. They're really in style right now.
And you have the Air Forces on.
I mean, I have the Air Forces on right now, but these are a little special. You know, these are the off whites. So I mean, you know,
it's something like
it's something like, you know. But I like the all whites. Do the all white Air Force One.
Hey man, bro, this was a wonderful podcast. Where can our listeners find you online? What's your platform?
All right, so we'll link it in the description below, but it's JWJ CAPITAL. So you guys can find us. All of our YouTube and all of our information is there. It's public. It's free if you want to learn about investing and the basics. But no podcast yet, and you know, maybe something in the future. But
I'm expecting a JW podcast.
Yeah, I mean, all my time right now is tied up into the server and into our members. So
for sure. Hey guys, I really appreciate everyone listening to this podcast. We bring out motivational content, and we're gonna try to be more consistent, bringing it out every month, finding someone who's positively impacting their community. And then once again, James, I really appreciate you coming on the podcast, sharing this game, these gems. And yeah, guys, all my listeners, definitely recommend you working with James if you're interested in investing or starting investing. James is definitely skilled in that. And once again, guys, I hope you guys remember that you are a leader, that no matter what, you are made to impact. You have a God-given talent. You're not going to find it in a classroom. You're not going to find it by a teacher, but it's already within you. So remember, you're a leader. You're an entrepreneur. You are a leader. You are a game changer, and you are made to change the world. And remember, keep humble flexing. Thank you, guys.
Thank you, sir.
That was awesome, bro.
That was cool, man.
Yeah.
Very nice.